Shailesh and Yamini today, and I'm going to let them introduce yourself. If you could both of you introduce yourself, a little bit more about both of your firms, and Yamini and your startup, and your journey on how you got to where you got to today. I know there's a lot of questions, but that packed in there. Yamini, maybe we'll start with you.
Hi everyone, I'm Yamini. I'm a co-founder and CEO of Waymo. Waymo is about 6 years old. Prior to that, I was a consultant at McKinsey. Most of my work was on sales transformation with large enterprises. And that's where I faced similar kind of challenges, enterprise by enterprise. We realized that we do not have visibility into what salespeople were doing, and it was very tough to tell what they could be doing better without this kind of visibility. So we built Waymo. I built this along with a very good friend of mine from undergrad. He was working with Google at that point in time and working on several of Google's mobile-based products. So we brought that tech to this problem statement and built Waymo. Waymo is what we call a sales acceleration platform. It sits on top of the CRM to automatically capture sales activities, learn what is working for the top sellers, and nudge every salesperson to mimic behaviors of the top performers. We are about 200 people now with offices across multiple countries, and we've raised 2 rounds of funding. Yeah, happy to discuss more.
Thank you. Shailesh?
Hi, my name is Shailesh Lakhani. I'm a partner at Sequoia Capital in India, based in our Bangalore offices. I've been with Sequoia for 13 years. Sequoia has been operating in India for about 14 or 15 years at this time. Sequoia in India and Southeast Asia now invests across a range of sectors, but mostly tech and tech-enabled, and enterprise software, and software is a big theme for us. I've been involved with a bunch of our software investments over the years. Yeah, very happy to be an investor in Yamini and Venkat's company, Waymo. Also in Capillary. A more recent investment in a company called Avatar.me, which is in augmented reality, as well as an investment last year in a company called SalesCan, which is a conversational AI platform. Sequoia, we're based across a few different offices, Bombay, Delhi, and Bangalore, and Singapore in the region. We're amongst the most active early stage investors in India every year. We probably have been way overweight on software, particularly the last 12 months. I think probably 60% of our investments have been software over the past year or so. It's a trend we're very much excited about. So very happy to share whatever we've learned with folks today.
It's great. And maybe just a follow on even for your intro, I know both of you kind of talked about kind of Waymo and Sequoia and kind of what you do at this moment. What got you, maybe Shailesh, we'll start with you here. What got you to be an investor, kind of your journey to where you are today?
So prior to Sequoia, I actually mostly grew up in Canada. And I was born in India, but grew up mostly in Canada. And ended up in India for a startup that I was working at, set up an office in 2004, 2005. I really enjoyed the experience, and I saw that India was definitely going to be a very different place in the next decade or two. I went to business school in the US, and then came back and joined Sequoia because I just felt like the opportunity here would be greater than almost anywhere else. And it's been a wonderful journey. When I started at Sequoia, we had a very small internet base in India. I think we had 10 million daily active internet users. We didn't have smartphones. We didn't have the cloud. We didn't have anything that would enable to where we are today. And now what we see is just the way technology is permeating just about everything in India, from the smallest business to the very large businesses, and how it's going to just fundamentally change society. So being someone who can have a ringside view of that and invest along those trends is something that really excites me.
And amazing. And Sequoia is a core part of the Indian ecosystem and the growth of the Indian ecosystem for the last several years. So, and Yamini, I know you mentioned about kind of how you turned from an operator to kind of found a challenge and wanted to fix this. What is that the biggest trigger, kind of that Waymo, and has that been the product since day one to what it is today? I'm sure you pivoted over, kind of changed over the time. But what was that one moment that you're like, you know what, I need to start Waymo. This is it. I can't take this anymore.
So I think McKinsey was pretty comfortable. There was no, I can't take this anymore kind of a moment. But yes,
I know.
but yes, from a problem statement point of view, having done that many times over, sales transformation enterprises, it just felt like, you needed a definitive solution and not just on paper theory, right? Simply because of the way it's structured, you'd get to only watch from the sidelines. And it just felt like it was a big enough and common enough pain point. Everyone was going through the same thing. And if you can bring in McKinsey to solve that, then there is a big TAM there if every enterprise is willing to bring in McKinsey to solve that. So at that point in time, wasn't even when we stumbled upon the problem statement and decided how we're going to approach it, we weren't aware of this thing called SaaS. We weren't familiar with how to sell anything, forget about software, neither Venkat nor myself. So a lot of these were building blocks we had to discover. I remember I was Googling what we were trying to do. I was Googling around pricing and stumbled into SaaS as a term, like as a thing, right? So thankfully, there were playbooks from other parts of the world, much, much less from where we were. But that got us to some form of a start. And then a lot of that was discovery along the journey.
And thank you for sharing that. I mean, I think what the one that stands out for you, and I know when Shailesh introduced, you have to meet this founder. One thing that he said, I distinctly remember, is that passion, right? I mean, it starts with that passion and like that, the it factor. And I think that comes with like wanting to solve it. And you mentioned all the right things that what investor would look for from a TAM, and how do you price it? But you may not have all the answers up front, but you're trying to figure it out. So that's kind of what. Thank you for sharing that. And that's a perfect segue to this question. I mean, just today is about B2B SaaS. I know, Shailesh, you invest in both consumer and enterprise. Specifically on SaaS, if we can double down on the number of funded SaaS companies have doubled in the last 5 years, and we're talking about the number of SaaS companies raising Series C and or later stage. That what we're seeing is quadrupled, and getting significant traction, continuing to gain so. From your macro perspective, from Sequoia and all the things that you guys have seen, what do you see as a future of global SaaS from India? Would love to hear your thoughts there.
Yeah, I mean, so I think this trend is super interesting. And it's been led by a handful of companies that have helped build out the ecosystem. I would go back to companies like Zoho, Freshworks, Capillary, and in the enterprise space, companies like Vimo, where we didn't have any talent outside of really engineering. India's always had great engineering talent. We've always been able to build good products. But the rest of the functions to build a SaaS company, whether it be customer success or product management or product marketing or inside sales or enterprise sales for SaaS, are things that we didn't know. And through trial and error, a few of these leading companies had sort of built out these capabilities. And several people from those companies have gone out now into the ecosystem, either starting their own companies or joining other ones, and shared a lot of the knowledge that was hard-earned in these areas. And I think Silicon Valley is exactly the same thing. It's percolation of prior talent that solved problems before. And India is starting to get that in SaaS. And even like specific micro markets like Chennai, which had fewer tech startups before, just because of that percolation has become a great place to start a SaaS company. And second is just like examples to build on. Some of these companies have been quite successful now, so many more people feel that they can do it. I can be like that person, or I can see an opportunity like that person might have seen. You have that feeling amongst way more entrepreneurs. Next, I think like the domestic market is something now that there is some market. There was much less software spend than today, a decade ago. There are many startups now that are very good customers, and they're equivalent to startups globally in terms of being customers. And so you can get to your first product market fit in this market and co-build a product with a customer. And additionally, I think another big trend that we're really fascinated by is just the distribution channels that exist in software. One of the main things that, let's say, Freshworks really innovated on was Google as a distribution channel. That's search marketing for enterprise software. So whether it be Google or whether it be the Shopify store or the ServiceNow store or the Play Store or the App Store, there's lots of channels now that you can actually use to distribute particularly an SME or a mid-market software product. We even see companies spending a ton of money, certainly on LinkedIn, but even on like Instagram as a way to market. And these are channels that weren't available a decade ago. That with inside sales and with people just being comfortable by buying software, that's enabled this huge wave of new startups because it's just much more possible to create.
That's great. And just as a follow-on on that one, we're also seeing an increasing trend of angel investments that are happening that are giving that early kind of token of cash for those founders who are deeply technical, but wanting that cushion to kind of up. Do you think that is also playing a part? Because I think it's like a cycle. What are your thoughts on that front?
Yeah, I would say there's certainly angel capital, and that helps a lot. I'd say the SaaS founders in particular have been very good about paying it forward with money. But I'd say even more important than that, the SaaS founders have probably a much more tighter community about sharing it forward with knowledge. That there are lots and lots of events and WhatsApp groups and content and sharing and willingness to help. Like I know the SaaS founders just rely on each other a lot, yeah, I think that community has become very, very strong.
I would definitely do a shout out to SaaS Boomi for sure. They've been one even helping me kind of connect with the right founders to see where we can help them with their growth story. So communities has been a huge part of that play. Yamini, to you, just on the exact same trend of how SaaS has evolved, how has that helped you? Waymo, from when you started, and you were saying you were Googling to see how you can do all of those things, to now, if a founder who's listening here today or operator looking to start a company, how has that evolved in the access, knowledge, talent, and anything and everything? How do you see that has evolved over years?
So I think, like Shailesh, I think the number one benefit of all of this has been talent. There were many, Waymo again is in a segment of SaaS, which is not the one that took off first. It was not SMB mid-market. We are large enterprise. So again, that was a lot of net new battles for us. So from a talent point of view, being able to shift very high quality engineering towards thinking about product, towards thinking about enterprise product. Similarly, roles like product managers, product marketing, I think is just very recent, like 2-3 years old in this country, right? So many skill sets we had to think through first principles, hire on the base of intrinsics, and actually build up by learning from our global peers. Right from that point of view, I think the global community has been very, very helpful. And it's been great because of the co-founder, like SaaS co-founder community in India is very tightly knit. And typically it's very simple. We are all on a WhatsApp group and we just pose the question and someone actually tells us the answer, right? So it's a matter of just knowing what your problem is and just posing that question. That is the bottleneck, not having done it yourself, right? So these two parts have really helped. For us, we had one more unique challenge. We were targeting very large enterprises, which erstwhile the playbooks are only with Microsoft or Oracles of the world, right? And we had to create playbooks. For that, it took a little bit more time. And then over the last 4 or 5 years, 3-4 years actually, playbooks from Nutanix and App Dynamics, who made it big with a pure, this is in the US, but still made it big with a pure enterprise approach, started emerging, right? And their sales playbooks started emerging, and then people started studying Salesforce, etc. And now there is a very good large enterprise playbook that you can, any newcomer can just replicate, right? So definitely having a community has huge value. There is competition amongst talent, but also now we have a very, very large pool of talent to work with and founders to leverage.
And, I think, absolutely. I think from, just the growth on the ecosystem has helped kind of educate even both the investors globally that we're seeing, even global investors looking to lean into kind of, go in early. Shailesh, on the, diving in a bit more on the investing side specifically, on the Sequoia front, what are some of the sectors, themes, and you mentioned about geos in Southeast Asia a bit, that you're leaning in more these days? And this is pre and post COVID, and if there's any COVID associated impact, would be great to hear that as well.
Yeah. So we are, as I mentioned, we're software and SaaS is just a really big theme overall. And it's something that we're spending a lot of time in. And we just finished our annual team reviews, and the people who are doing software were super tired after the year. And the people who are not were less tired. You know, they didn't have as busy a year. So we felt an imbalance in our own team. But going forward, like, what we see is just like in software, there's infinite niches. There's almost no niche that is too small anymore. The number of software tools we all use is going up. The specialization that you can do to drive incremental value, because the advantage the software can give you in almost any part of your business is something that we're finding just many more people willing to pay for because of how easy it is to adopt a cloud tool. And so that's an important theme that we're seeing. The issue with that is that it's also so easy to create a software company today that we see just lots of Me Too's. I can think of a category of software that we looked at recently, and then we could find, you know, all sorts of products. There was somebody who was selling a Mercedes in that market. There was someone who was selling a Toyota. There was someone who was selling a Maruti. And there was all sorts of different products, and they all kind of did the same thing. One of the things we're trying to see is that we're seeing that we think there'll be a lot of commodity SaaS that does not scale, particularly for mid-market and SME. There'll be much more competition around pricing. We're starting to see that already. And right now, the overall just number of customers adopting stuff is growing. So most of these companies are still growing, but there's certainly a lot more competition on pricing than there was before. And then much more importantly on marketing. A lot of the distribution channels I talked about earlier are actually paid channels. Obviously Google is, but even Shopify makes a lot of money on their app store. So you're going to see that you're going to need to find a way to be unique and differentiate. You're going to need to find a niche within a niche, or you're going to have to create a network effect, ideally based on intelligence and data, where you just provide something better to the customer. At least in the last year or two, we've really slowed investments in like just workflow software. The software that we're looking at is just much more intelligent. You need to understand your customer much better, and not only just help the customer manage the process better, but do it in a more intelligent way, in a way that they couldn't have done with just any other tool. And those are some of the things that we're thinking about in software today.
And how about the geos? I know Southeast Asia was mentioned in there.
Yeah, so Southeast Asia, you can start a software company from anywhere. Because of the same factors of distribution channels that you can access on any market. We still think India probably has a bit of an advantage because of the engineering base. In many of the Southeast Asian markets, it's hard to create a medium-sized team, and you're going to be limited by just the talent available. In India, there's really no upper limit to the number of engineers that you could hire if you really wanted to. So we're still probably more optimistic on India as a software market, but some of the Southeast Asian countries are actually higher GDP per capita, so they have reasonable domestic markets, and they get off the ground a little bit faster. And some of the markets like Singapore are fairly westernized, so the culture and the workflow can kind of easily translate to other Western markets, whether it be Australia or Europe or the US. So there's a handful of companies that stick out in there, but I would say India is still the main focus of our SaaS investing.
Yeah, and Sequoia rolled out a Surge. I mean, the world knows about this now, but you guys rolled out a seed program called Surge in April 2019. Have continued to grow strong even through the pandemic, and that just shows your confidence in obviously the ecosystem going in early and earlier and earlier. I've interacted with several founders from the Surge, and they're all superstars. So curious in terms of and you guys invest from all the way to that early stage to growth stage, right? Kind of like you double down where you need to. I mentioned about this in my notes as well, asking for the magic sauce here so you don't have to reveal all Sequoia secrets. But how do you decide when do you want to go in early and when do you want to double down with the growth capital? mean, I think everyone wants to be as a part of Sequoia portfolio. So how do we get there? Like,
look, we want to be, and firstly, thank you for the kind words. It means a lot, and we're only as good as our next investment. So we want to be the first business partner to a company, and ideally invest as early as possible. We were very fortunate in Vaimo's case to be the first institutional investor and really the first outside shareholder from the founders. That's what we want to be in most cases. But in some cases we won't get there, and we will do things like we did Freshworks, which started as a growth investment because we just recognized that we missed it and we didn't see the trend clearly enough, and we have doubled down several times in Freshworks over the years. Look, if you had asked a software investor 10 years ago, conventional wisdom that SaaS was going to be important, but market sizes were going to be similar to the existing market size in that segment. We're all learning and evolving. Obviously, SaaS has been way bigger than just on-premise software. And that's something that if you had just invested in Freshworks in the first round 10 years ago, you may not have been able to see that. And as more and more data emerges, as more and more trends emerge, as you just see more in a company, you increase confidence that it's worth doubling down on. Similarly, in Vaimo's case, we saw that look, they were largely an India-centric company when we first invested, and most customers were here. But they were seeing a lot of pull in Southeast Asia in particular. And we're able to expand there. It was very easy for them to raise a subsequent round because just the market size that they were addressing had expanded. And that's probably it's all really related to that. If the market size just keeps expanding, if the company keeps executing it, it's very easy to double down. And we generally want to be the first business partner to every entrepreneur that we work with.
That's great. And Yamini, I know Shailesh referenced a lot of Vaimo in there, so I'm going to kind of pose that question on the other side of the table here, which is exactly the theme that we're trying to get out. Walk us through your fundraising journey. I know it has not, obviously you were able to get some of the best folks like Sequoia, Emergence, and others. Walk us through how your journey has been and some of the key takeaways or learnings that folks listening here as they're fundraising to do, how can they best position themselves to be successful in that journey?
Yeah, in our case, I think right from the beginning, both Venkat and I were aware that we'd never done this before. We weren't coming from a software company to build another software company, and that we would make a few mistakes, hopefully a few, and only a few, and we'd have to learn along the way and get a lot of things right. Right. So I think what we were very open to early on was judging whether the momentum we were seeing, whether the pull we were seeing from certain segments, like we did go behind mid-market, we did go behind different verticals, right? But we were, because it was just Venkat and me and like a very small team, right? We had not raised yet. It was easy for us to say, you know what, this is not moving fast enough. This doesn't seem big enough. We don't like the payment cycles in telco as an industry, right? Just payment of our own fees, right? So we could we could use our judgment on things that we didn't like and actually scrap that and start clean slate on what we thought and double down on what we thought was working. So we got to experiment very fast. And we were okay doing that because we didn't have the we didn't have the, we didn't need to prove anything at that point in time, right? We just needed to get it right. So somehow the first year and a half were a lot about Venkat and me getting conviction that this makes sense and that not only can we sell this to one customer of this kind, but there is 100 out there, right? Once we were convinced about that, and that because momentum starts building up, there was this day when we had 3 very big logos in the country. We were only in India, but we had 3 very big logos from the same vertical, financial institutions. And we had 7 people on our team. And our problem was actually not even about how to get the next 10 logos. The problem was how do we deliver all of this in 2 months, right? Even to just keep these customers. So that's when we said, okay, now it looks like we know what we are doing. And it looks like we can get from here to at least, 10 times bigger, and the journey for the next year and a half is clear. And that's when we started speaking with investors. So I guess at that point in time, because you worked yourself so much on getting clarity, I think that comes up in the conversation, and your own conviction comes up, and it probably makes it a much easier fundraise conversation when your visibility into right. And since then, our philosophy has always been do the experiments on your own money, and when once you know these are working is when you raise, and you raise for momentum on the back of that momentum.
And any, I mean, I think anything that if you had time to kind of go back and do differently, would you do that as a part of fundraising journey?
No, definitely. I think historically, would we change something in the case of Waymo? Not specifically in the fundraising journey. There are many things that we've learned over time, which probably we would try to get right the first time, right? The first sales hire, the first product manager hire, so on and so forth, but not necessarily in the fundraising journey. Yeah. Though I keep joking, I was speaking about this with someone who was so stressed about being a first-time founder and jumping off a cushy job that, now is actually the market for second-time founders. So be a first-time founder just to check the box. It's so much easier now to build a company, like Shailesh said. Of course, there is more competition, but if you are very clear on the problem statement and you're focused on the customer, not on competition, then you will find a way to solve it, and that will stand out. And even there is enough of a cohort of large SaaS companies now where you can even get a strategic exit, right? So my point to this person was, do your experiment now, because this is actually, you should be thinking of being a second-time founder in this time, not even a first-time founder.
Exactly. Yeah. You have nothing, I mean, I hate to say nothing to lose, very less to lose, more to gain at this moment. Yeah. Absolutely. And talking about go-to-market, maybe Yamini, we'll start with you. You just mentioned about your playbook. Would love to hear kind of how do you evaluate new markets? I know in kind of your journey, it was, you started off US, but you actually paused a bit and you moved on to Southeast Asia. Kind of would love to hear kind of your journey on how you evaluate new markets, and how do you know when to kind of lean in more, when to kind of pull back as you kind of build your footprint.
Yeah, so for us, I think it was obvious that the largest TAM is sitting outside of where we are, right? So it's very, your decision on going global, whichever geography you're from, is usually driven by TAM. And for anyone who's not in the US, therefore getting there first, fastest is probably the goal, right? So for us, in our case, as we were identifying the product market fit, India started working in very well for us. So somewhere in the first year after raising funding, we were actually just busy figuring out how to execute against India itself. And very soon it just, many of the logos that we won in India were actually logos, international logos like AXA, Allianz, etc., had offices and much more connectivity with their regional offices within Southeast Asia. And that's how Southeast Asia happened. It actually happened on the basis of references, and that's how we closed the first two customers. So somehow those became easier for us just from a less friction point of view, and that's where we went. In general, playbook for, if I had to write down a playbook and do one thing differently, it would say try the largest market first, as long as you have runway. Because any market you're trying to get to, and in our case, because it's a large enterprise story, so you'll have to go through product market fit, then getting the right team, then scaling, etc. Right? It's usually a 1.5 to 2 year journey on cracking a market, right? Even if it's working very well for you in one geography, usually a new market. And this is true even for example, very large 100 million ARR companies in the US, when they try to look at Europe or when they try to look at Asia or Japan, they give themselves 2 to 3 year runway. I realize that actually very late in life that it takes that much of time. But prepare yourself with momentum wherever you are, so it can fund some of this runway, and make sure that you have conviction on the new market, you have cash in the bank to give yourself that time, and then go behind it. Otherwise, the faster is the better. The faster you can do this is better. If you're playing in markets which are not the largest TAM, probably you spend too much on solving aspects of product which may or may not be relevant to your largest TAM market. So sooner is better.
And how does that, just a follow-on question on that one. So if you're going to Southeast Asia, or any startup is looking to think about, am I going Southeast Asia or kind of US market, which is the largest market, is there any cultural nuances and like product nuances, go-to-market nuances that they would need to kind of pivot in each of these markets, and that kind of also adds to your kind of runway and to
So
build?
for us, I think the decision, I'll tell you how our decision was. I think this is where the nuances kick in. It's not natural that everyone's largest or fastest market will be US. In our case, our solution was heavily mobility oriented and needed to be deployed on top of a CRM. So you needed to be fairly steady in your CRM journey. The first time post Sequoia, when we thought about US, we realized there was a lot of momentum just picking out on deploying a cloud CRM like Salesforce, right? And a lot of noise on what that CRM could or couldn't do. Whereas Asia markets, we realized the pull was very strong because Asia markets were making a leapfrog from, there is no workforce on desktop or laptop era. There is just your entire 100,000 workforce working every single day on mobile era. That was happening, right, over the last 3-4 years. That made it extremely easy for Waymo, given we are a mobility solution on top of a CRM. The CRM story was reasonably steady state in Asia, and the mobile workforce story was actually on a very high growth momentum. And we were able to write that.
So you were able to capitalize on that one.
For us. Now is when the CRM story is kind of reasonably done and dusted in the US, and it makes sense for us to easily communicate our value prop because the boundary conditions of a CRM are much more clearly known now of a cloud CRM, right? So now the storytelling is becoming easier, and now we see that as the perfect timing for us to do this. So the context may be nuanced based on who you are targeting and what exactly your problem statement is.
And Shailesh, to add on to what Yamini was saying, so if you're advising a recent version of Waymo, right, like early version of Waymo, how would you advise a company to think about newer markets? And is it doubling down on your existing markets, or look broad, like multiple footprints at the same time, or what's the right approach?
Yeah. So for an enterprise company, what we have learned is similar to what Yamini was saying, is that you need a full stack everywhere in every market that you go into. That when you go a new market, you will need to have local salespeople, you'll need to have local support people, you'll need to have customer success, you'll need to have everything in that market for that market to really have a chance of being successful. We've seen too many times where someone, by luck, happens to win an account in a geography. They try to service it very remotely without the same level of care that they would have done with something in their home market. And a year or two later, that customer ends up churning. But if you invest in that market, you can actually be very successful and have references and then keep growing in that market. And enterprise companies are generally quite good at expansion. Once they get into a large account, they're quite good at growing. And if you don't have that that part of the business, it's a much less exciting business. And so, yeah, you have to, as Yamini said, you have to pick the right markets to enter, and macro and the big markets are what matters. You will spend probably similar amounts of effort on a market size X as it is X by 2 to get in and to build something there. Additionally, when you think about different markets, even as an enterprise company, you need to think about, in many places, about channels. Some markets like the Middle East, for example, you could only sell through a channel. Those channels themselves take some time to build up. So there's lots of complexity. And then you'll certainly need to do some product work. And again, you need to pick something that's big enough so it's worth doing. So everything from language to currency to regulation to workflows, like people use different, we've even seen that Waymo, how people in different markets use the product in very different ways. And some things that, at least initially to us, were pretty unintuitive. Of why would you do it that way? But that's how things work. And so, yeah, pick your right spots, go deep and build full stack in those places. And as Yamini said, just give it some time. It will take time to get going. For SMB and mid-market, though, it's a little bit different. That you can have customers much more in many more markets. You might just need to do language and currency customizations. You might need to do even less than that in some places. And we see some companies be able to get all over the world. The issue that is just marketing, and how do you reach those customers in those places? there are different ways in different markets where people learn about software. But for enterprise, I think just being very strategic about picking where you go is very important.
Do you see the increasing trend of, similar to Yamini's story, but Yamini obviously could go anywhere. But in the case of like going more leaning into Southeast Asia, are you starting to see that trend happen from Indian SaaS companies? I've seen like Indian SaaS for US, but more Indian SaaS for Southeast Asia businesses. So are you seeing that trend continuing to increase?
Yeah, absolutely. There's very few engineers in Southeast Asia, and
Right.
India is a market that will provide a lot of capability and functionality and software for them.
Right. We can't avoid the inevitable and elephant that's in front of us and around us, which is the COVID and the pandemic. And 2020 has anything but what we've all expected it to be. But from Shailesh to you, what has the impact has been through your portfolios? And I know you guys work very closely with your portfolio through scenario analysis and helping them kind of bring back not just to their numbers, especially on the enterprise segment, but also beat it, right? How did you work with them? Like, what are some of the key learnings or key advice that you gave them? That is obviously the ones that's been solved and gone. That's one time is different, but the ones that's continuing, that that's not done yet. That's continuing to take key takeaways that founders here listening today could use that as they're building up their 2021 story.
Yeah, so for software companies, it's been an interesting year, of course. I think a lot has been determined on how the year has been is on what segment that you serve. If you serve a segment that's been deeply impacted, if you are a travel software company, you probably faced a lot of pain for this year, and you're probably still not back to normal yet. But if you were in a category like obviously like Zoom that we're using right now, or video conferencing, you've had the time of your life. It's been you've been just customers been falling all over themselves to get in the door. And so the end market mattered a lot, but without a doubt, the general trend is digital transformation, as it's called, in every company. And so the increasing use of software and technology. Most companies we've seen as a general trend, and of course exceptions based on the industries, are well above pre-COVID levels. That technology has become more important as a channel. It's been the way they communicate with customers. They have found ways to be more efficient and found ways to leverage technology that they might have gotten around to in a few years, but it's accelerated things way faster. What we don't know, and this is like a discussion we have a lot, is what is the new normal? Because right now we're in some sort of transition phase where vaccines are just starting to roll out. I think we had the first jab yesterday of somebody in the UK getting a vaccine. And the best example we have is from our Chinese colleagues, where the new normal and the old normal are exactly the same. People are traveling just as much as they used to. Our Chinese colleagues used to travel 3 days a week. They're traveling 3 days a week. They have offsites. They have CEO summits. They have everything, and they wear a mask. But yeah, so it's really hard to say what next year is going to look like. And then does this vaccine work? And is there a second or third wave or another strain, or who knows? But yeah, the ball is going to bounce some funny ways in the next few months. We should all just be prepared for anything. But generally, if you're a software company, you're probably in a good spot.
If you're saying the new normal could be the same as our old normal, that's it. People are celebrating as you're talking right now if that is going to happen. But curious on valuations. I know there's been a huge impact on valuations across stages in completely unique ways, right? Like some stayed the same, some actually like went off the roof, some actually hit hard. How have you guys seen that impact in your portfolios? And also, how has that impacted your deals and opportunities that you invest in 2020?
Yeah, valuations in software have only gone one way for most of the year. And multiples are at levels that, that would be a good profit multiple for most companies a few years ago. Today, you're getting crazy revenue multiples. Like we used to think 10 times revenue was a premium SaaS company 3 or 4 years ago. Now the companies are getting 30 times revenues. And yeah, at least some of them, we don't think they're premium companies. So it's not unheard of to have 100 times revenue for a really for a category creator that is in a potentially very large category. What's that meant is that most investors have gone earlier. That people who used to only invest above 10 million ARR now often invested $1 million in ARR. And people have much more confidence that a company that gets to 5 customers will get 50 or 500, and so are willing to come in earlier. And it's back to the same trends of software adoption and distribution that make everyone believe that's possible. So everyone's going earlier. If you were a seed stage founder through the course of this year, certainly in India, you probably had multiple options of investment. And I was speaking to a couple of seed stage companies this week where people were just quitting their jobs and they'd already raised rounds of capital. So, I mean, I see Yamini smiling because it was quite different than when she started out a few years ago. That none of that was as possible. Way more poking and prodding about, could this actually work and be big? Those questions are mostly gone.
Yeah, thank you. And Yamini, how has that sales, I mean, we chatted offline, but how has the sales impact has been for you? I know you guys went through all of those stages to the now obviously thriving. And what are some of the key changes that you put in practice that is in Shailesh's word, new normal, that is here to stay? It could be like teams, it could be like how you're, your go-to-market virtually, or anything that kind of stands out that's here to stay for the change.
I think it was actually a good time. The timing of it was interesting, right? We had just raised and we had just started building momentum in many new markets that we were addressing. When this hit, obviously the first question was, what is the initial reaction? Because we target financial institutions. It's not like the sector is getting wiped out. Like Shailesh said, it was not travel or retail, for example. So then there was a very cautious, let's be cautious. So let's stop experiments, which we were about to start, some of the high risk experiments, like a market where we do not even have a single customer or a brand, right? Let's double down. The second thing is to double down on what's working. Expansion is a very big part of Waymo's growth, like land and expand. So it just made sense that first we make sure that we keep our existing customers happy, help them tide through this, and help them run their own experiments as they adapt, because we are helping them on sales. They are going through a lot of transformation themselves. And if we can make sure that as a product and a partner, we're supporting that, that will help us actually do our own expansion within these accounts, right? So that became just those two were obvious around March, April. Obviously, we spent a lot of time on building a very, very nice business plan in February, and we had to throw that out of the window. After that, this year has been interesting. I think every quarter we assume something and something else happens, and then we double down or get a bit more cautious. But this quarter has been largely about trying to make the right, this year has been largely about trying to make the right bets. And we now are seeing momentum come back almost across all markets, right, and customer profiles. And I actually find it interesting. Shailesh's point is right. The new normal might be very similar, because there were things of course, people want to, for example, capture Zoom meetings on Waymo earlier, where they were trying to capture face-to-face meetings on Waymo, probably. But so there are a few shifts, but it's very shocking that old behaviors have not disappeared. It's not like someone has abandoned a prior way of selling to completely shift to a new way of selling, because customers have not 100% changed their behaviors. And enterprises have realized there is a reason some of the traditional models have worked better for them. So we've seen a lot of our customers experiment and reasonably shift back to their old methods for at least a very large part of their business. So it's true, it might be that the new world is very similar to the old one. What has helped definitely is acceleration and less resistance to stuff like acceleration of tech and less resistance to stuff like cloud. That just makes your sales motion at the larger scale easier. So that's eased out SaaS quite a bit into enterprises at least. But the behaviors might and the buyer personas, how you sell, etc., what you're selling, I don't think have got very dramatically impacted.
And Yamini, as a follow-on, how has your team handled all of this, and how have you worked with the team to keep the morale up? Because as you're talking, I can see that, it's like up and down, right? It's and given obviously a lot of people are dealing with a lot of it, home, work, everything. How have you held the team together and continuing to grow? The team has grown significantly.
I think around this time we did hire a lot of people. There are folks in the company that we have never met face to face before, right? So it wasn't as tough as one would have expected. In absence of COVID, if someone would have said, "Hey, do this, like give up your office and just figure out how to build a remote working company," everyone would have been probably skeptical. It wasn't as tough. But I do believe there is a very, very big social aspect to, especially when you're building a company. There is a lot of leaning on each other that happens. There is a lot of bonding that happens. Some of that is tough because ultimately your time and communication is now restricted to how many hours of Zoom calls you can take. So definitely some of those relationships which we used to lean on quite a bit have not had that kind of nurture during this time. And we all miss that. And we try to replicate that in some shape or form. But all of us are actually waiting for being able to go back to office and actually meet our customers in person and just have a coffee with them without having a 15-minute Zoom agenda that we need to get through. Right. So we do want, I think the office is going to stay for us at least. Right. And in terms of how we went through this process, I think we just decided to talk throughout this process. So every Friday, we used to have town halls once a month, all hands once before, and now we have it every Friday, and sometimes we just log in and play some games. Like this Friday, I think we are doing an auction, but still, who the new people on the team are, you get to engage with them, so on and so forth. So we just over communicate now.
And how do you work with your investors? Like in this case, Shailesh is an example. Through that journey, how do you keep your investors comfortable in terms of how you're kind of pivoting, adapting, continuing to grow? How does that work?
Yeah, so it's both ways. I think even here, I think we have increased the cadence of communication, etc., and catch up much more often, because it's not just about keeping them comfortable with what we are doing. It's also they have been Shailesh, Jake, etc., have been conduits for us to know what else is happening, what is working for the others, right, and what is okay, and not to get completely shattered by, and what is actually something that's becoming a trend and we need to ride on, right? So it's been both ways, and it's a communication. I think even in this relationship has actually only gone up.
That's great. Thank you. And Shailesh, I know we're almost there in like the last few minutes, but I want to have a couple of questions for both of you. What do you look for? Like we talked about the product, we talked about the market, we talked about different sectors and geos that you look at. Now, just bringing it to the team level, what do you look for in a team? What's like a perfect team for you guys to kind of lean into?
Yeah, I think a SaaS company is really interesting because there are different phases of the journey. The beginning of the journey, you need a lot of domain expertise, and it's an exceptional hustle. You just need to be able to run super fast and be very, very creative. Hack your way to product market fit and get into a customer. There is lots and lots that you need to try and you'll fail at, but just that experimentation is what seems to work from all the companies we've seen. But once you get to a little bit of scale, like $500,000 or $1 million in revenue, that hustling or being that hero in a company actually is a negative, and it moves to structure. You'll find that specialization is the only way that you can scale. And look, we've learned this through making mistakes with a bunch of companies over the years, is that sales in particular, which again is the thing that I think we're learning the most in sales, and I mean sales is all GTM, is something that actually as you get bigger, it just needs to get more and more structured. That whether it be marketing, whether it be inside sales, whether it be outbound sales, whether it be collateral generation, whether it be your customer lifecycle management, whether it be customer success, which I also see as broadly in sales. All those things need to get specialized and institutionalized and become processes. That you can't have the CEO get every single feature request and try to push that through the team. You'll need to find a way to manage that within a system and a process. And so you need someone who can make that transition from being that exceptional hustler to being someone who's very, very methodical over time. And those are often opposite traits. And this goes along with all the other things of like building a world-class product and raising money and all that. But the mindset of growth in SaaS, I think, is particularly counterintuitive. And someone who has a very good learning mindset is what we're really looking for.
And last, I know we're like at the last few minutes, the closing thoughts. I was mentioning to both of you that obviously one of my favorite quotes is from Doug Leone from Sequoia. Obviously, he says, never waste a good recession. And he says, this is the right time, good times for exit, good times is for exit, but the times like this is for buy, for investors, but for founders, it's to build. And Mark did the same reporting on time to build as well. So what are your thoughts, both of you, from an investor lens and from a founder lens, going into 2021? How should a founder or a startup position for success as they continue their journey into 2021? Shailesh, we'll start with you.
Look, I think we're certainly not in bad times right now anymore. We might have been for a few weeks or months. Not necessarily time for exit, but this was probably a very good time to fundraise if you're a SaaS founder and to fuel up on resources. And if you are looking to exit, it is probably a good time as well. The amount of inbound interest you're probably getting is at least a local maxima. For investors, it's hard. It's hard to make an investment today. That there's everything is at all-time highs in multiples and valuations. It's not super clear what happens next or the next couple of years. I hope we'll all be using Zoom less next year. It'd be bad if we were using it as much. And so that's going to have some impact on their business, but I don't know how much. I think this past year has been a wonderful year to build. I'd say every single one of the companies that we work with the exception of maybe one or two, has really gotten a lot better through the course of this year. That they are just far healthier as businesses. They're more focused. They've had a chance to fix technical debt, or they have a chance to settle on a long-standing directional question that they've had. And yeah, they're going to have great 2021s, kind of irregardless of the way the world goes. So yeah.
And Yamini, closing thoughts?
Yeah, I think that summary 21 can only be better than 2020. And 2020 was a lot of be cautious on where you're betting, where you're over investing, etc., but also build a very strong backbone. So I agree with Shailesh. I think everything that we've done to get focused and build on our strengths, build deeper relationships with existing customers, stronger success stories, strengthen the product, etc., and be more efficient as a team, I think it only has to pay up way more benefits in 21. So, yeah. And I don't think
thank you so much, everyone. Thank you so much for both of you. We're right at time, but appreciate all the insights that you shared. And thank you for listening to us today. If you need to reach out for any questions, feel free to DM me on LinkedIn, and happy to follow up. Thanks, everyone.
Thank you, everyone, for joining.
Thanks, Yamini.
Making it a great summit and being part of it.